there everyone, good afternoon. Welcome to this edition of Closing Trades right here on ET Now. I'm Avan Dabash and the market's holding out comfortably in trade. We've got the bulls firmly in control at 24,200 and much heartening to see this after many days of straight consolidation with a definite negative bias that the market has been seeing. The broader markets as well are comfortably in the green and it's PSUs all the way. That's really the sector that's doing all the heavy lifting. That aside, you've got the entire rate-sensitive basket, so be it real estate, the banks, they're all up and about in today's trading day. In fact, just taking a look at the overall Nifty 50 list, and it's literally a handful of stocks in the red. It's gains that are being powered ahead with the likes of ONGC, Bharat Electronics, SBI, and then you've got the other heavyweights from the private space like Hero Moto, Reliance Industries, ICICI Bank, HUL, along with HDFC Bank too. That's up about 1.5%. Just touching upon then some of the newsmakers as well, and Aisha Faridi also joining in on the show. Aisha, afternoon. It's a steady day of trade and lots to watch out for by way of the newsmakers as well.
Oh yeah, absolutely. And you know, it's good to see that the PSUs are the ones which are making the faster comeback. Be it an ONGC, be it an BEL, you've got an SBI holding up very smartly. BPCL has been knocking on hefty gains from the word go. And even with the broader end of the market, defense, railways, the entire battered down. In fact, I should say the first ones to be battered since the market correction in the past 2 months. That entire lot is making a very, very smart comeback. But of course, still fingers crossed, you don't know how sustainable this is going to be. But yeah, sure enough, if you have defense, railways, shipyard stocks, all of those make a comeback and a meaningful at one end that, then sure enough, you can assume that the market may have bottomed out for sure in the near term. I'm going to quickly take it across to Kunal before we take it across to Gopal Agarwal as well from HDFC AMC. But Kunal, what's the reading looking like? Slight bit of heaviness at the top, but largely we managed to cling on to that 1.5% sort of gain.
Yeah, it's been a good day so far because we've managed to sustain the gap of opening. I think that was a big question mark, that whether the markets would hold on to the gap or not, and whether there could be more profit booking or intraday selling. But the selling has been confined to just about some 150 odd points on the Nifty, on intraday basis when we look at this from the top to the intraday lows for the index. However, I think we've still not closed the gap. That I believe is a very good sign. Large cap stocks still holding up, and I think now we have new additions towards large cap names which are recovering on an intraday basis. So I think that should add to the comfort for short-term traders and expecting the markets to get back into an uptrending mode. This is the expiry week, so I think that's the most important part, because if we hold on to that 24,000 mark, bulls go into the next expiry, the December series, on a much more positive note.
All right, that's the view coming in on the technicals, but let's put the spotlight then on HDFC Asset Management. It's the AMC of the month right here that we're celebrating on the channel. And let's connect with Gopal Agarwal. He's Senior Fund Manager Equity at HDFC Asset Management Company. Thanks so much for taking time out, and let's talk a little bit about the mutual fund industry, because we have seen a pretty phenomenal growth. The SIP accounts as well have grown. How would you talk or how would you view the entire space as a whole, and do you believe that we have a lot more room to grow?
Yeah, thanks for inviting me. So good afternoon. So I really see that mutual fund industry is really taking off very well, as we are seeing the financialization of savings are really increasing. And we have seen like change in tax structure in the last 2 years. And also the interest rates have a softening bias, which is making equity as an attractive asset class. And also what we are really seeing that in India, this formalization of economy and really the good earning growth in the last 4-5 years has led to very strong equity return, which really putting much more broader base of investors joining this equity market. And I feel we have still touched the surface. We have long way to go from here. We are still around 5% penetration. So we still, as this industry is getting matured and people are making reasonable return over a period of time, I think the long way to go from here.
Yes, indeed, a long way to go. Gopal, just wanted to understand, where is it that you have the most concentrated bets within your portfolio? Because, post this recent market correction, one has really made that sort of distinction, which one never did, between small and mid caps on one end and whether large caps are offering more value on the table or not. And within large caps, given the high amount of rotation within sectors as well that one is seeing, what are your biases in the market right now?
So, very clearly, Aisha, in the last couple of months, the market has a very strong rally. We moved up very, very sharply. And now, with this moderation in the government capex and the moderation in earnings in Q2 results, we are really seeing the sectoral rotation is happening, and even it is being added by the Trump victory in US. So the FIA's action on Indian market is really changing. So what I really have done in the last couple of months have added more incremental large cap to my portfolio and moved my money more towards the larger private banks, this IT sector, and also the power related space, where I really find medium to long term opportunities are very strong. And in this volatility, I'm using this correction to add some bit unknown name across the sector, whether it is from auto sector or whether it is from the oil and gas space. So wherever there are value, even in real estate sector, we got some good names correcting. So I have added across, but primarily moved money into the large private banks, IT and power related sectors.
Okay, interesting there, looking at the overall sectoral task. But I just wanted to understand how one should be looking as well when it comes to earnings, because there were a number of one-off factors as well. But I think the general sentiment is that this sort of a muted set of numbers is only going to continue into the coming quarters. Would those concerns or would those fears be validated, or do you believe that the previous quarter earnings were a one-off?
I would say that the extrapolating the last quarter earnings may not be the right way to look at the market and potential of Indian equity market. The last quarter we had a lot of one-offs added by the election, the heavy monsoon, and also the off season in India generally. So and government capex was really weak last quarter. So one should not extrapolate what has happened in Q2 earnings. My sense is that things will normalize, and it has potential to deliver reasonable earnings growth in the quarters to come. But honestly speaking, as an investor, I'm also watching the pace of recovery, because market is sensing very strong earning growth in H2 FY25, and it is being supported by a lot of management commentary on the con calls and everything, that the second half is likely to be very strong. So we are really watching whether that will play out or not. But in general, the looking Q2 earning as a base for Indian economy is not the right way to look at.
Gopal, so on what prognosis, other than the points that you just highlight, do you believe that second half is going to make a comeback when it comes to earnings? Because you did mention that you do believe that government expenditure, now that the state elections, large part of them are behind us, should actually improve. Of course, we have the wedding days as well coming in here, and typically seasonally higher consumption months as well. What gives you conviction that second half we will have earnings make a comeback?
So what has happened very clearly, let's say you have, as you rightly said, in the second half, generally the consumption propensity increases. We have a large number of wedding days in the second half. Third point is that the agriculture production and realization are better than the last year. Water levels in the reservoir is also quite good, which will support the second half, the agri production. So, and also what we are really seeing in the first half, especially the government capex from the central government was quite muted, and generally, it picks up post Diwali, and because the activity on the ground picks up. So it gives us a lot of conviction that the second half is likely. Generally, we have seen 45, 60, 55. Even in the historical past, that like the first half if contributes to the 45% and second half contributes to the 55% of the spending. So if you just look at that way, then the second half really holds a lot of promises in terms of the earning growth actually.
The other niggling factor, Gopal, which has really weighed down on the consumption patterns, has been inflation. What is your own reading in terms of whether or not we'll have inflation a little controlled, which the RBI governor now terms as a horse and not an elephant anymore?
Yeah, so definitely, the inflation has actually surprised us very negatively. We have seen a steep increase in agri inflation in the last month, especially October reading was quite high. And as per the communication from the RBI itself, that we might have peaked in terms of the inflation and it will moderate as the time passes. So definitely, let's say the agri inflation is really still quite high, and it is expected to come down with seasonality is likely to come in play. So that will likely to support the consumption. Second point is that the welfare scheme launched by many states, and we have seen even in the state which went into the polling in the last couple of months, we have seen increase in state government welfare schemes, so which will lead to some positive effect on the consumption side, and in general the economic activity picks up in the second half. So it will also support the overall consumption even from the rural India, which got impacted because of higher agri inflation in the past.
Fair enough. I wanted to also understand your take then on the entire mid cap versus large caps, and how you're looking at that trade really playing out for the coming year. Do you believe that there will be a degree of outperformance within the large caps, or do you think that the mid caps will be neck to neck?
What I would really say that good quality mid cap will continue to perform well in the market, because what happened, the investors have a lot of appetite for mid cap, because India is a growing country, and and we are still at $3.5 trillion economy. We have a long way to go from here. So the roadmap for growth for the mid cap segment looks very promising. So based on the RBI's communication also, let's say the inflation might have peaked, and second half will have a moderation in inflation. So there is a possibility of a rate cut, though the timing is very difficult to predict, which augurs also well for this valuation of mid cap. And the ongoing correction which in the marketplace makes them relatively less expensive than what we had seen in the past. So my sense is that one should not completely write off this segment, though it can consolidate or it can have a time correction for some time. But for a growing country like India, the mid cap and small caps have actually a decent place in the portfolio of the investor.
You highlighted why is it that you're liking private sector banks right now, or financials largely. I want to talk about the one sector which has been relatively a lot more resilient in the recent market correction. In fact, has done really well, I should say, and that's the IT sector. What do you think the IT stock prices are pricing in right now?
So, Asha, the two things which has happened in the near term, let's say the FII outflow led to, the currency depreciation in India, including entire EME space had a currency depreciation. So, IT being an export-oriented unit is being supported the valuation. A few other things is that, like, let's say the attrition in this sector has peaked. We are seeing moderation in wage growth in this space, and with now quarter on quarter we are seeing slight improvement in deal wins and the execution. So that is also supporting. And investors have memory, of 2017 when the Trump came and the tax cut which their administration provided led to increase in discretionary spend. So market is pricing in the same phenomena in the months to come. So whether it will be there or not, time will decide. But that's a trade market is pricing in.
Sure. The other sector that I wanted to talk about, which has seen quite a fair amount of correction play out, Gopal, recently, has been energy as an entire sector. Do you think valuations are looking reasonable right now, and do you expect upside in the energy basket?
Yes, so energy space, if you divide it between the thermal and the especially oil and gas side, in the oil and gas side, we have seen reasonable correction in this space, because of some of the government action, and also, let's say the investors worry about the outcome of the state elections, and whether continuity of policy will continue or these companies can take the pricing action, which was, the investors have a lot of worry. And so my personal sense is that we should look this sector in a holistic approach, even despite the geopolitical concern which is there, where we have two wars which on the ground is there. Despite this, we are seeing the crude oil is behaving well. It is trading in a band which is very comfortable for a country like India. Second point, I would say that in the near term, though the gas prices are higher, but the way the production is going is likely to increase in the next 1.5 years in US, Australia and Qatar, which should support the lower even the gas prices going forward. So one should not very much worried about very, very short term. The unfortunate part of the market is that nowadays investors really focus on quarter to quarter, and all this is really hurting the valuation in some of the space. My personal sense is that if one take medium to longer term view, then this sector offers us very good potential in terms of earning growth and also free cash flow generation in this space over time, actually.
So is there a basket within energy plays? What exactly are you most bullish on, considering it's a pretty large sector?
No, I am playing across, actually, because I really feel that the valuation in this sector is quite reasonable, and if you look at globally also, market is now taking a view that both ICE and EV both will survive, actually. If you go back initially in 2017-18, market has taken a view that EV will take the center stage, and ICE will have a negative growth. Now we have come to a situation where both ICE and EV will survive. So in such a situation, the investor should take a holistic view on the sector rather than taking like a very short term view on the events, actually.
That you get as well when it comes to the overall liquidity situation, given what we've seen pan out in the year gone by. What's the expectation? Will it be more of the same, where the foreign investors will continue to remain on the sidelines or remain net sellers of India?
See, My personal sense is that, now most of the FIIs are like equal to slightly underweight on India. Like they have come to their aggregate portfolio basis. So, let's say there are a lot of expectations about the policy changes in US. So once investor will assess it in the next 3 to 4 months, they will be in a better position to take a call, where to place their money. There is really in the short run very knee-jerk reaction is happening because of our poor earning growth in the Q2 and expectation of a tax cut in US and earning upgrade there. So whether that phenomena, our earnings, if it recovers and what they are expecting in US, if it is unlikely to play out the way it is being expected, then definitely investors have to look at a growing economy like India. So I would place that India is well positioned from a medium to long term perspective, that honestly in the near term the valuation had gone up very sharply, and add to that we saw a moderation in earnings. So these are very, very short term, and some reaction is really expected, and we should not we should respect this kind of reactions from the investors. So but one cannot negate the long term potential of Indian equity market. So I think the FIIs will take a very holistic view in the next 3 to 4 months to place their bet on the market.
Gopal, I just want to go back to the point that you were making about energy, as to how you believe it's the hybrid engines which are going to be the engines of the future, and it's not going to be either or, that's ICE or EVs. Tie it in with your views on autos, because there again we've seen very distinct moves between what two-wheelers have done and what PVs have done to what CVs are doing, and even within PVs you are seeing some bifurcations happen.
Yes, so what happens very clearly, let's say in this space, the best part is that the two-wheeler sector people had earlier wrote off because of emergence of EV and the threat on ICE. So, but as I told you, let's say the investors have assets it, and they have found both are going to coexist. So the sector was really under owned in their portfolio. So, and we have seen the reasonable earning growth in this space. So you have seen the strong move in two-wheeler stocks in India. In particularly on the four-wheeler, especially four-wheeler autos, we have seen this earning growth momentum has held moderated, and because of this we are seeing the time correction in this space actually. Though I would really say as our economy growth will pick up, and the per capita income will rise, so four-wheeler has a good long-term potential. But in the near term, as the earning momentum in the four-wheeler space had moderated, so you are seeing some time correction in this space. Now coming to this CV, and CV had some moderation. We saw negative growth in this space, as we have seen also the investment in infrastructure and capex had slowed down. So now there are expectation that second half there will be some spending increase. So definitely I would say that with moderation in steel prices and government capex likely to pick up, so this sector now offers better potential.
Appreciate your time. Thank you so much for joining in and giving us an all-round view on the markets, as well as what some of the important triggers could be and where it is that you see value. On that note, we'll take a very quick break. Be right back with technical stock recommendations and a lot more market perspective. Don't go anywhere.
Back with closing trades right in ET now. It's actually cap goods. Look at Siemens, Cummins. They are the ones which are sectorally leading right now. A solid 7% move is what you're seeing on Siemens. Cummins holding up 7% in trade. And then, of course, there is the rest of the PSU pack. The likes of an ONGC, a 5% dash there. BEL holding up 5.5%. and the banks as well are not behind. So both SBI as well as BOB is your top performer today with a solid 5.25% move. But Naresh Mirani too on the show with us. Naresh, specifically on the PSUs, and I'm going to include banks here, does it seem like the trade is going to last long enough?
So on the PSU bank side, it looks more interesting compared to the defense and railway names. So if you look at the State Bank of India, it's been a sharp recovery. We are back to 840, 850 band. The recent highs for the stock was around 860 in the previous recovery post numbers. Overall, the all-time highs are at 900. So it's still been a relative outperformer. We've seen a strong recovery in the small names also, whether it's a Bank of Baroda or Union Bank of India or Bank of India. So PSU banks as a setup in the PSU side still looks interesting. We've seen finally a oversold bounce in the oil and gas space, wherein we saw a 20% correction from the top. There also we could continue this momentum. So oil and gas and PSU banks still look interesting, and maybe power stocks on any decline.
All right, just checking in then within the broader universe, and although of course there is a rally playing out across the board, here's some of the names that really stand out. Something like an NCC is looking good. There's Indian Bank as well as Obama Lorry, IDBI Bank and Hoodco as well are some of the stocks that stand out. Kunal, wanted to get in a quick take. What's your outlook within the entire PSU banking space in terms of what's looking interesting?
So SBI, of course, is one of the strongest name over here. The stock has recovered quite well over the last 2-3 days, and I think if we exclude for last weeks of price underperformance for SBI on the back of the news surrounding the stock price, I think it was a stable stock. The stock was still holding on pretty well, closer to that 800, 820 as a support for SBI. So that's a chart which still looks attractive. Now I believe that it could be time that the other PSU banking names, the likes of PNB, Canara Bank, these stocks could make a very strong comeback. We're seeing some shades of recovery coming back into the non-FNO stocks, the likes of Union Bank, for example. That's a chart which is looking attractive. Many of these PSU banking names are coming up from a zone where they were almost 15%, 10 to 15% below their longer-term moving averages. So that divergence which was there was at an extreme, and that divergence could start to get a lot more narrow. That could offer trading opportunities of at least another 5% to 10% into many of these names as well.
Ajay Bagga as well on the show with us. Ajay, hi, afternoon. Good to have you on the show. And looking at the comeback from PSUs, I was just looking at the list. It seems like markets quite pleased. In anticipation itself, they moved up on Friday. And what a thumping move in the markets today after NDA winning the very important and critical Maharashtra elections.
Yeah, Aisha, overall, it was an asymmetric event. If the NDA had lost, then the federal government itself, the stability of the federal government would have come under question. The coalition partners would have questioned the might of the government. But to lead a coalition to such a landslide victory has really cemented the central government as well. So it was an asymmetric event, and we are reaping the benefits of it. Mostly these state elections are very short-lived impacts on the market. So I would not get carried away by today's move. We'll have to wait and watch for follow-on moves. But it is a very important state. As you mentioned, 14% of GDP, 9% of the population. And Maharashtra remains one of the heavily industrialized states and very heavily a state with a good potential for the China Plus One, for the manufacturing renaissance, for the industrialization, and as well as capex. So today we are seeing all those themes moving on, apart from real estate as well, because a loss would have meant a lot of the recently announced projects also would have come under a cloud. There is nearly 4 lakh crores of capex underway, public capex underway in Maharashtra itself. So it would have been a big stumbling block to the smooth transition to a better infrastructure economy. I think all those have got tick marked with this. We get 5 years of a very stable government. That's the positive which is helping the markets today.
It sure is. And looking at the PSU pack, that's looking quite phenomenal. While the likes of a Cochin Shipyard, Garden Reach, they're all in excess of a good 50% off from their 52-week peaks. Today, of course, this entire pack is making a very smart move. Look at Bharat Dynamics, which has fallen nearly about 48% from its 52-week peak. If you can just fire those intraday graphs. Today, Cochin Shipyard is holding up a good 5%. Garden Reach as well will just come off you on your screens. Bharat Dynamics holding up almost 6.25%. There's, of course, Mazgaon as well. Not a whole lot of valuation comfort there, but that stock also has fallen a good 32% from its 52-week peaks. Similar is the case with the Bharat Electronics. Of course, it's fallen a lot less, 17.5%, but Hindustan Aeronautics, BEML, significant cool off and crash from their 52-week peaks. But Ajay, does it seem like this PSU trade will make a comeback? Because that was really fancied. This is the pocket where you saw the first signs of crack emerge in the market. And now it seems like most of them are getting pretty comfortable in terms of valuations.
Two drivers there, Aisha. One, the pre-budget rally is starting, and normally we see railways, defense, these kind of sectors pick up in anticipation of the union budget. So that's one thing. Second, they've fallen a lot. So the standard trade is what has fallen a lot will be the quicker to recover than those which held value. So there is some money chasing, but on valuation basis, railways, defense again are a question mark, even at these 30-50% cuts that you spoke about. I would rather go with the power finance kind of companies, the power transmission kind of companies. So the power sector in PSUs, the utilities in PSUs, and the PSU banks. I think those are the ones which are more stable, which are more justifiable on a valuation basis rather than the railways and defense, which are rallying strongly today. Again, they will hit a stumbling block post the budget. So we will see a rally going into the budget, as happens nearly every year, and then you will see a sell-off post the budget. So that would be a word of caution. If you can ride it for the next 2 months, then it's good, and get off before the doors start closing. But overall, in terms of fundamentals, I think they have to catch up a lot on the earnings part of the PE ratio, and that has not come as fast as desired. So I don't see these being in a space where they will keep on rallying on a sustainable basis. This is more of an anticipatory rally and a relief rally that we are seeing. And when that stalls is anybody's guess, but definitely post-budget, you normally see a sell-off in such stocks.
Morning, Ajay. Afternoon, Ajay, rather. What is your outlook then when it comes to the capex-related themes, given that we're talking about a further infra push domestically and the entire capex, theme catching momentum or picking up momentum? What's the sense that you're getting? Will it be, a strong outlook for private and PSUs as well across the board within this space?
See, like power is a very strong theme across private and PSU both. So anybody financing the power, connecting the power, or somebody implementing the power rollout, those will do well. As far as the other themes go in this broader segment, I think industrials capex are bound for a bounce back. They were hit quite hard. What really has happened is we saw 3-4 months of underspending. Then with the new government and the new budget in July, things have started slowly moving. We have not seen the kind of orders that we were seeing over the last 4-5 years. So I think now in the second half is what the market is anticipating. More orders coming in, private capex also picking up. A lot of the private capex has been on the back of promoters raising money directly from the markets and investing rather than from the bank credit. So it is a well-funded private capex, and we are hoping that it will get some momentum. Overall, the economy's capacity utilization stays in the high 70s. So still some way to go. But there are pockets where it's happening. And then infrastructure rollout remains a big theme. The government won't be able to spend the 10-11 lakh crores that was budgeted for this year. Some of that will get carried forward, and that has reflected already in the industrials capex infra place. But here on we see the government moving quite resolutely on that, and you can expect some big order announcements to start coming in over the next couple of months, which will boost this sector. So overall, the broad sector is doing well. Within that, we like power a lot. We like the capex plays a lot, and the specialized infrastructure. I think those should do quite well. The very highly valued PSU railway defense, I think, still a question mark.
Okay, good to have you then, Ajay, and good to get in that insight on the sectors as well as the market overall as well. Good speaking with you. Okay, let's take a very quick break. Still holding on to the gains, 24,274, 24,211, I beg your pardon, 325 points higher right now in trade. That's once again the PSUs, ONGC, BEL, L&T, SBI, BPCL, they're the ones which are taking the lead amidst the large cap names. Quick break, be right back for more.
Thanks for staying on with us, and it's a sea of green across the board. It looks like we have sustained that momentum from the start of the trading day, having built on it or having sustained that, and I guess that's rather heartening. And it's the PSUs that really are taking the front seat across the board. The PSU index is up and about, and it's on a tear after that resounding victory largely for the BJP and its allies, as investors largely seem to be seeing this as a positive when it comes to policy continuity and an infrastructure push actually being sustained. But the question is this run-up in PSUs going to sustain? Is there going to be a renewed rally in this space? Let's take it across then to Jinay, who joins in with a list of some of the PSU stocks and what is driving this momentum. Jinay?
Well, definitely. If you look at the PSC index, considering today's move, it's about 2 to 3%. And if you consider the Friday's move, then it's about 5 to 6% rallying in today's session. Also, if you look at the recovery, it's largely led by a couple of themes. Firstly, we'll talk about the railway stocks leading back by Railtel, Titagar Wagons and Rides Limited. Also, the defense and shipping stocks, which is leading the overall PSU index. If you look at the stocks, then it is Hindustan Aeronautics, Bharat Dynamics and Garden Ridge Shipbuilders is what is leading the overall shipping and defense pack. The third segment would be PSU banks, who are leading. We are seeing a strong performance by Central Bank, SBI and Canara Bank in focus. Also, oil and gas pack is also leading this rally, where we are seeing a strong performance by ONGC, BPCL, HPCL and GAIL. Now, apart from this, there are also several other counters where we are seeing a strong up move like NHPC, BHEL, REC, Hindustan Copper, General Insurance Companies, among others. Now, if you look at the index before rally or at the last week's closing, then we are seeing that the PSU index was overall down about 17% from its 52 weeks high, and with multiple stocks, the constituents of the stocks were down as much as 45 to 48% from their respective 52 weeks high. If you look at some of the stocks, then Bharat Dynamics was down about 48%, Ircon International down about 47%, stocks such as MMTC, Mishra Dhatu, Nigam and Hudco were also down in excess of 40%. So after a strong fall over past 3 months in the PSU index, we are seeing a strong recovery from past 2 sessions in the overall PSU index.
Okay, Jinay, we'll leave it at that. Let's welcome on board Daljit Kohli as well and find out what he's making of the market right now. Daljit, does it seem like a sustainable recovery? Kickstarted a little bit on Friday, and what a follow through today?
Good afternoon, Aisha. It's difficult to say whether this is sustainable or not, because ultimately market will come back to fundamentals. Say 1 or 2 days move can be because of the news flow related, event related items. We have seen that there was a big event which was intervening. So obviously market had some pre-positioning towards that, and then now there is a reaction which is in favor of the market. But more important, I think, would be for sustainability, it will be ultimately fundamentals which will drive. And unfortunately, after quite a few quarters, this quarter number was not very good. It was not very exciting across the sectors. Most of the companies, most of the sectors have shown a decline in the growth momentum. And so there could be an aberration that the quarter 2 was a lean quarter. There were a lot of things in between, erratic rainfall, elections, etc. So as of now, the consensus has downgraded full year estimates by very nominal 3-5%. but number of downgrades is much higher than the upgrades. So important thing to watch out will be what happens in quarter 3. Going by this current situation, the asking rate in second half is much higher to maintain this growth. Now, whether the companies will be able to deliver that, whether we see that recovery, that will be a key thing to watch out. I think that is where one has to be really more inclined towards to understand whether your companies are coming back and whether this was just a temporary blip or is there a change in that growth momentum.
Daljit, hi. Let's get in your take then on what the outlook is when it comes to earnings and how have you seen the quarters gone by. Going into the coming quarters, where is it that you expect sustained momentum and where is it that you expect that there will continue to be a bit of a fallback?
See, I think consumption-related sectors, we believe that it's our hypothesis as of now that probably quarter 2 was a lean quarter and an aberration. It would come back probably, mainly because the festival season was in this quarter 3. And not traditionally, we have seen that the quarters where there are festivals, you normally see the consumption picking up. However, important thing to note is what kind of impact this inflation, especially the urban inflation, had. The ground reality or the ground checks tell us that there was a growth deceleration there. Most people were impacted by high inflation, and especially in the cities, in the urban areas. So we are building in an expectation that probably the rural will take up from here onwards, and rural will bridge some of that gap. Mainly because they have had positive policy momentum from the government side. There is a lot of all these Ladli Behan Yojanas and all these Prime Minister Yojanas going on. So these things will help them get those that money, which can create some kind of consumption boom. And secondly, monsoons were good. So chances are that probably we'll see some reverse and the input costs are down. So one sector which can do well is consumption related. High-end consumption continues to do well. So that will again, we hold some of the stocks as a disclosure in our portfolio, which are related to premium cars and high-end luxury items. Then pharma and chemicals will see probably good earnings. There is a predictability factor there. But other things in the related to manufacturing, commodities, etc., I think we will have to watch out and wait for the quarter 3.
Kunal, I want to get you in on the charts of some of these cap good names. Of course, L&T has been showing fair amount of leadership, but today the spot in a Siemens and a Cummins as well. What within cap goods is looking good for a buy?
So I think L&T is the strongest name so far because we look at this on a relative basis, not just on today's price performance, but we look at this at a point where, say, from the end of September, which were the stocks which had corrected very sharply. So, for example, the likes of Cummins, the likes of Siemens, etc. These stocks had fallen somewhere in the tune of 15% to 20%. Some of them had fallen much more than 15% also in the last 7-8 weeks of this market correction. But L&T was one of the strongest names. So when we look at this relatively, the first bottom which was made for L&T was around the 3250, 3350 odd mark. That was in the first couple of first half of the month of October. From there on, the stock formed a higher low, which was at 3500ish odd mark for L&T, and then was amongst the first few large cap names to recover and come back again above its 200-day moving average. So today, which means after this kind of a price action move, L&T is one of the strongest names so far in the cap goods space. Then it should be followed by the other stocks. I would probably believe that Cummins as well as Siemens, these are the other two names which one could look to bet on. But I believe largely that the first stock which could probably break past about the previous swing highs should be L&T, looking at the relative strength over the last 2-3 weeks.
Okay, that's the view coming in on cap goods as a space, but let's find out those BTST ideas as well. And Naresh, what is it that's looking good on the charts?
So first would be a buy on Wipro, a new 52-week higher, good momentum, stop loss at 577, target price of 600. Second is a buy on Dabur India, which has corrected a lot from the highs, has started giving a recovery in the last 2 sessions. Would expect this momentum to continue tomorrow as well. Stop loss at 520, target price of 525.
Kunal, what BTST trades are looking good to you?
So I'll go with a buy on ONGC with a target of 270. Stop loss could be kept at 254. And Aisha Motors is the other stock which is looking attractive. The stock trading just about that breakout point of 5,000. So buy with a target of 52.50. Stop loss at 4,900.
Okay, there you have it. Those are your BTST trades. Meantime, Naresh, let's get in some chart checks going then. And what's the outlook when it comes to the entire auto space? It's a mixed bag in today's trade. Some of the auto ancillaries seem to be taking the front seat, but what's looking good within the entire space?
So the leader has been Mahindra & Mahindra in terms of not seeing a large correction, but continues to hold on to the lows of the last 6 months. So on dips, Mahindra & Mahindra continues to be a buy. Second is Aisha Motors, which is in touching distance of a breakout. If you look at the last 3 to 6 months, multiple attempts around that 5,000 mark. If it sustains above 5,000, we are looking at a much bigger move in the stock going forward. So Aisha Motors and Mahindra. In terms of a dip buy, it would only be Hero MotoCorp, which has seen a good correction from 6,200 to 4,600, 4,800. So that could see a bounce back towards 5,300. But overall, the top picks would be Mahindra and Aisha Motors.
And Aisha Motors, but the fireworks today seem to be in HDFC Bank. Kunal, did you think that it's going to be a life high for HDFC Bank?
Yeah, actually, I thought maybe a week back that the stock should be hitting life highs. It's a bit late, but nevertheless, I think it's been a very good comeback for HDFC Bank. So from a point when the stock was a huge underperformer, when the entire private sector banking rally was going on, towards a point when the stock is amongst the strongest name in the heat of this market correction over the last 8-9 weeks, I think that itself tells you the kind of quality the stock holds. So I believe at current levels of 1790, 1800 approximately, the stock hitting fresh highs for itself is an indication that this could be a starting point of a major multi-month, multi-quarter up move.
Quite interesting. Daljit, are you also bullish as much on the prospects of some of the private banking names and more the underperformers from last year, case in point being HDFC Bank actually leading the charge now?
No, Aisha, actually, we are not holding any of the banks as of now. Within the financials, we have very small exposure, and that too only towards housing finance and the power financials. The two sectors where we find that valuations are attractive, and these companies do not have that kind of problem of growth as well as the asset quality. For the banks, etc., we've been holding this view that they'll have to go through a patch of dullness because of the cost of funds going up. At the same time, asset quality, because people have almost forgotten that even retail can go bad at some point of time. Last 4 or 5 years, only private sector banks have grown only on the back of retail. No corporate lending. Corporate growth was very, very small. It was mainly driven by retail. So now the retail balance sheets are heavier. And if anything untoward happens there, then we'll have to see how these things will pan out. So I think asset quality stress slightly is a cause of worry for us there. And the cost of funds is still not very conducive. And on top of that, every one of them is fighting for deposits now. So liquidity getting crushed. So all these three things actually make us a little cautious about the sector. Within the sector, we have been focusing on power finance because the government has huge capex there and a lot of this new solar schemes, etc., rooftop solar, etc. That is going to give a lot of benefit. And then this Prime Minister Awas Yojana, these two things I think will drive the growth for these two companies.
Fabulous day today, not just the index making a solid comeback back above that 24,200 level on the futures, but the way some of the PSUs and of course heavyweights like an SBI, HDFC Bank, which just hit its life high a short while back, all of them have actually participated in trade. But Daljit, Kunal, Naresh, all of you, good to have you on the show as always. I'm going to hand it over to Snehi to wrap up the market action for us.
Absolutely, Aisha, like you mentioned, it's been a fabulous day for our markets today, and even if you take a look at how much Nifty has gained on a spot basis today, more than 1% gain coming in intraday. However, we managed to cross that 24,350 level on the Nifty. We've receded slightly from those levels at 24,250, so 100 odd points lower from the day's highest point, but nonetheless, it's a massive rally coming in on the Nifty today. Sensex too 1.3% higher, more than 1,000 point uptick coming in, and there's really not much to complain about the way today's trade trading session has panned out. If you take a look at the broader markets, good show of strength coming in from the broader markets. The mid-cap index was up more than 1.5%, a good 900-point rally coming in on that index as well. The small-cap index was the one that's outperformed the markets today, 2%, more than 2% gain coming in for the small-cap index as well. If you take a look at some winners and losers that have helped the Nifty stay afloat today, ONGC up 5%, L&T was up 4.2%, BEL, BPCL, SBI, Shriram Finance, HDFC Bank. Good moves coming in on all of these stocks. However, what did not do well, JSW Steel was under pressure on the account of being replaced by Zomato in the BSE Sensex. So on account of that, JSW Steel was lower. But on the flip side, Zomato was another stock that was up and away in today's trade, and also that the board has approved the 8,500 QIP for Zomato coming in. So Zomato is a stock that did rather well, 3% higher is where that stock is ending the day. You had Tech Mahindra, Bajaj Auto, Infosys, Maruti Suzuki and Asian Paints on the Nifty that did not do well. However, if you take a look at the advance decline ratio, very solidly in the favor of the advances today, so not much to worry about. India VIX was lower by 5% today, so that's another positive move coming in for our Indian markets today. However, India VIX continues to hover around those 15.1 levels, so that's slightly shaky, so we'll be watching out for that as well. But well, yes, if you take a look at some sectoral gainers and losers, PSU Bank, your top sectoral gainer on the back of that central bank insurance foray coming in, followed by Realty, Nifty Bank, Nifty Media, Energy, Pharma, IT, Auto, FMCG and Metal. So that's the pecking order in which the day has closed today. But well, yes, very good moves coming in on Nifty. 24,254 is how we've shut shop today.
If you like this video, then like, share and subscribe to ET Now.